Good day. Wherever you are, I welcome you once again to AE Accounting Tutorials. If today being your first time paying visit to this channel, kindly subscribe to be a member of our channel. Today we are continuing our series on depreciation of non-current assets. By this time, we are going to take a full practice question where you will be required to prepare the asset account, the provision for depreciation account, and asset disposal accounts, probably the income statement extract and that of the statement of financial position extract. Is that okay? So, but mind you, in the part 1 of this video, we actually look at the various methods of calculating depreciation. That is the straight line method, the reducing balance method, the revaluation method, the sum of years debits method. All right, so this time we are going to take full practice question, then we try to solve it to actually materialize what we've learned in the part 1 of this video. So without wasting much time, let's quickly go to the question and then try to solve it out. Is that okay? So Cizo Enterprise started business on 1st January 2020. The purchase and disposal of the motor vehicle of his business are as follows. You have motor vehicle, you have date of purchase, you have the cost, you have date of disposal, you have proceed on disposal. You have 3 different motor vehicles, that is A10, B20, and C30. Okay, so A10, date of acquisition 1st January 2020. The cost is $250,000. And date of disposal is 1st January 2022. Proceed on disposal is $45,000. Motor vehicle B20 was purchased on 1st January 2021, cost $125,000, and there is no disposal. Motor vehicle C30, date of purchase 1st January 2022, and the cost is $350,000. The rate of depreciation is 20% per annum on cost. The rate of depreciation is 20% per annum on cost using full year policy. You are required to prepare the following. I. Motor vehicle account. II. Provision for depreciation account. That is on the motor vehicle. III. Disposal of motor vehicle account. B. Income statement and statement of financial position extract as at 31st December 2020, 2021, and 2022. All right. So when you meet any depreciation question like this, the first question you need to ask yourself or to look for is the methods of depreciation you are being asked to use. Okay, because you have several methods of calculating depreciation. So you first of all need to ask yourself which of the method they are requiring you to actually apply. And after that, you also consider the policy, because you have several policies of depreciation, being the each month ownership, being the full month policy, and others. So you have to actually consider the policy and the method. But from this question, they are telling us to calculate depreciation on the cost of the assets. So anytime they say we should calculate on cost, that is the straight line method. Is that okay? Or the fixed installments. And then the policy here is using full year policy. Is that okay? So you have to know the difference between the full year policy and then this each month ownership. The difference is that for full year policy, we actually calculate depreciation at the year of acquisition, but at the year of disposal, we don't calculate this depreciation on the year of disposal, irrespective of the number of months the asset is being in the business. But for each month ownership, the year of acquisition, we calculate depreciation. The year of disposal, we calculate depreciation based on the number of months the asset is being used in the business. So basically that is the difference. But in our case here, we are having full year policy. All right, so before we tackle the individual or the account we are being told to open or to prepare, we first of all need to make this question very easier. We need to actually calculate for the depreciation. So this will bring to us a statement for depreciation, or a schedule for depreciation. So let's quickly prepare our statement for depreciation, or statement of depreciation, for depreciation. Mind you, this is not part of the requirement, but this will actually help us to make our workings very simple. Okay. So we have as motor vehicle A10, B20, C30, and there will be the total. So $10. Bring my currency sign. Okay. So this will be the years. So we are going to prepare the statement for depreciation according to the years. Is that okay? And the way they acquire the asset and its disposal. So on 1st January 2020, we acquired assets. From the question, we acquired assets A10, okay, and the amount is $250,000, and we have to apply the rate, and the rate is 20%. So we have our 20% on the 250,000, and this is going to give us $50,000. And in the year 2020, we didn't acquire B20 and that of C30, so we have no depreciation for this. So the total still remains 50,000. So we are done with 2020. So for 2021, that is 1st January 2021, we made an acquisition. Okay, we acquired asset B20, but before we calculate the depreciation for B20, we have A20 still in the business, so we have to make provision for that, or we need to calculate provision. Sorry, we need to calculate depreciation for that. So that is 20% on the 250,000, and that is 50,000. Then after that, then we look at the acquisition for the year. That is B20, and the cost is $125,000. So that is 20% on $125,000. Is that okay? So we are going to apply the 20% on $125,000, and this is going to give us $25,000. We didn't acquire this, so the total will be $75,000. We are done for 2021. So for 2022, we acquired an asset, that is C30, and we also disposed the A30 on 1st January 2022. So let's first of all consider the acquisition, that is C30, okay, and the cost is $350,000. So we will still apply 20% on $350,000, and this is going to give us $70,000. And mind you, we disposed motor vehicle A10 in 2022, but I told you you need to consider the policy you are using. because it is a full year policy, at the year of disposal, we are not going to calculate depreciation. Is that okay? But if it were each month ownership, we should consider the number of months before we calculate the depreciation. So we are not going to calculate the depreciation over here. So, but mind you, this motor vehicle B20 is still in the business. Is that okay? We didn't dispose of B20, so we need to calculate depreciation. That is 20% on 125,000, and this is going to give us 25,000 dollars, and the total is $95,000. Then we are done for 2022. So we have to add up the total. So you have 100,000, 50,000, 70,000, 70,000, then 220,000 plus 6. So when you add up these three, you get this. When you want to know that either you are correct or not, you add these three. The answer you had here must be the addition of these three. Is that okay? So from the statement of depreciation, we are going to use the totals to prepare the provision for depreciation. So when we open the provision for depreciation account on the motor vehicle, it is the totals that we are going to use. Is that okay? And the totals at the bottom, we only use it when we use it to actually know the accumulated depreciation for each of the motor vehicle, so that anytime we are disposing it off, we take the accumulated depreciation from the overall depreciation of the asset. Is that okay? So let's come to open the motor vehicle account and that of provision for depreciation. So this is just a workings, it is not part of the requirement. So we come to that is AI, that is motor vehicle account. Okay, so this motor vehicle account, it is a cost account. The reason why I'm saying it's a cost account is that we are going to use this to actually record the costs of the asset. Apart from the cost, we don't record any other thing. So anytime we acquire an asset, we debit the motor vehicle account. Anytime we dispose of an asset, we credit the motor vehicle account with the amount we bought the asset, not the amount we sell the asset. So that is the difference. We only credit the motor vehicle account with the disposal we made, but with the cost of the asset. Then we debit it when we made acquisition. So on 1st January, we acquired asset A10. Okay, so acquisition, we may acquire maybe through cash. So you have cash, you can even acquire through check or bank. So that is A10. And the amount is 250,000. In this particular year, that is 2020. So let me break the year. That is 2020, because we are presenting it year by year. So for 2020, we didn't make any acquisition. Is that okay? So what we did in 2020 is that we only made the disposal of this particular asset is being done in 2022. So when we get to 2022, then we dispose it off. So for this particular year, there is nothing we can do again. So we need to actually close off this account. That will be on 31st of December 2020. That will be the balance CD. That is $250,000. Then we close off this account. So in a subsequent year, that is 2021, this balance CD will come to the next year as balance brought down. That is 1st January 2021 as balance brought down 250,000. So in the year 2021, we made another acquisition, that is motor vehicle B20. Okay, so we made an acquisition by cash B20, and the amount is 125,000. Is that okay? So after the acquisition, we didn't make any disposal, so we need to actually close off this account. Is that okay? So by closing it, the total will be 375,000. 375,000. So that the carrying amount will be on 31st of December. CD, that is the balance CD. 375,000. So in the subsequent year, that is 2022, we will have our balance brought down on 1st January. Balance brought down of 375,000. Is that okay? So after bringing the balance brought down, then we look at the acquisition. We acquired an asset, that is motor vehicle C30, an amount of $350,000. Okay, so the amount is $350,000. So that is cash. That is C30, $350,000. But mind you, in 2022, we disposed of an asset, that is asset A10, and the cost of asset A10 is $250,000. Anytime we make this, we made a disposal, or we dispose of an asset, we use the cost to make the entry. So that will be disposal. That is 1st of, so this is 2022, 1st January. We made a disposal, and the cost is $250,000. Is that okay? So we need to close off the account. By closing, we have 725,000. So on 31st of December, the carrying amount will be 475,000. So that will be in a subsequent year, 1st January 2023. The balance brought down will be 475,000. So we are done with the motor vehicle account. Is that okay? That is the I part. So let's also consider the II. That is provision for depreciation account. So II. Provision for depreciation account. With this provision for depreciation account, we use it to record the depreciation for the period. The provisions or the provisions we've made on the assets. Anytime we make provision for depreciation on assets, we are going to credit the provision for depreciation account, and then the corresponding entry is going to be in the profit and loss account. That is, we credit provision for depreciation account, we debit profit and loss account, because the accounting standard says that depreciation is an expense and it has to be actually matched against revenue in the income statement. So we are going to debit the P&L account. So we are going to use the annual depreciation we calculated from the statement of depreciation to make this entry. But it is going to be, the presentation is going to be done year by year. So we start by saying 2020, that is our first year, and we are dealing with dollars. Alright, so in 2020 we made provision for depreciation of 50,000 as it is being found in our statement of depreciation. So that will be at the close of the period, 31st December, because we prepare our final account at the end of the financial year. So we will be presenting it as at the 31st December. That will be the profit and loss account, so P and L, and the amount is 50,000. Okay, this means that we are going to debit the profit and loss account. So that is the provision for depreciation for 2020. So we are going to close this account by saying that on the 31st of December, the balance CD will be the 50,000. Then we close the account. Is that okay? And this balance will come in 2021. 2021 as brought down. That will be on 1st January. The balance brought down as 50,000. Okay, so in 2021 we had another provision for depreciation being $75,000. So that will be at the close of the period, and it will go to the P&L account. That is, in 1st January 2021 we had provision for depreciation being 75,000. Is that okay? So 31st December, and to go to P&L being 75,000, and that is all for 2021. And to close off this account, we are going to have 125,000. So this will be the balance on 31st December. The carrying amount will be 125,000. We are done for 2021. So we move to 2022. For 2022, we will have this carrying amount as on 1st January. That is the balance brought down being $125,000. Is that clear? $125,000. And at the end of 2022, we had another annual depreciation being $95,000. So that will be at the close of the period. To go to the profit or loss account, $95,000. And that is all. But mind you, in 2022, we disposed of this asset. That is motor vehicle A10. We disposed it off. So we took the cost from the total cost of the assets. So we need to also take the accumulated depreciation from it. Is that okay? So the accumulated depreciation will be taken care of in the provision for depreciation account. So by so doing, we are going to take this accumulated depreciation for A10 and write it off against the provision for depreciation account. Is that okay? That is a disposal. So we made that disposal on 1st January 2022, being it disposal. Is that okay? Being it a disposal, and the amount is $100,000. So by closing this particular account, we are going to have an amount of $220,000. And then at the close of the period, that is 31st December, the carrying amount, the balance CD will be $120,000, and this will be on the 1st of January 2023 as the balance brought down of $120,000. Is that okay? So we are done with the provision for depreciation account. Is that okay? So let's quickly move to the requirements. Let's move to the requirements III, which talks about the preparation of the disposal of motor vehicle accounts. So that is III. That is disposal of motor vehicle account. With this disposal of motor vehicle account, we actually prepare this account to actually ascertain the profit or loss made on disposal. Is that okay? So the asset that we dispose of, we debit the account in the asset disposal account, then we credit it accumulated depreciation and credit proceeds on the disposal. So that is what we are going to do. And mind you, we dispose of motor vehicle A10 and the cost is 250,000. Is that okay? 250,000. So we are going to debit it. It is being found at the credit side of motor vehicle accounts. So the corresponding entry is to debit disposal account in the name of motor vehicle. So we have motor vehicle. Mind you, that is A10. And the cost is 250,000. Now let's actually consider its accumulated depreciation. Its accumulated depreciation, it is being found at the credit side of the provision for depreciation account. So disposal, credit side. So we will come to it is being found at the debit side of provision for depreciation account. The debit side of provision for depreciation account. So we are going to credit the disposal account, that is depreciation or accumulated. This is accumulated. And the amount involved being 100,000. Is that okay? So now let's also consider the proceeds. Okay, so from the question, that is on 1st January 2022, we dispose of motor vehicle A10 of an amount of 45,000. Okay, so that is proceed on disposal. The proceed is 45,000. Is that okay? So now we have to determine the profit or loss on disposal. So let's balance all these accounts. We can see that the debit side is bigger than the credit side. So in effect, the profit or loss will be found at the credit side of an amount of $105,000. This means that we are going to debit the profit and loss account with an amount of $105,000, and this is a loss. So loss on disposal. So if it is being found at the debit side, it means we are going to credit profit and loss account, and that will be a gain on disposal. But in our case here, it is a loss on disposal. Is that okay? So we are done with the requirements III. So with the B aspect, we are being told to prepare income statement and statement of financial position extracts. So let's quickly try to actually prepare this account. It is very, very simple. So we have that is the B aspect. Okay, I'm just managing the board. We have our income statement, Income statement. But mind you, it is just an extract. Permit me to use the horizontal approach. Is that okay? Is that okay? So with the income statement, what we are going to do is that anytime or with this account, you can see that from the provision for depreciation account, you can see that we have profit or loss at the credit side of provision for depreciation account. So we are going to debit the income statement or the profit or loss account. It is very simple. It is just a double entry transfer we are making from the provision for the depreciation account. So that is at the close of 2020. So we have at the close will be 31st of December 2020, and we have depreciation, and the amount is 50,000 from the provision for depreciation account. Okay, and we move to the next year, that is 31st December 2021, another depreciation, and the amount is 75,000. Is that okay? The amount is 75,000. From there, we consider the next year, that is 2022, another depreciation. But mind you, the amount here is 95,000. And we are done with the provision for depreciation. So let's consider items in the disposal of motor vehicle account. That is loss on disposal. So we can say that loss on disposal, and the amount being $105,000. Okay, and this is just an extract. So we are done. It is just an extract. We are not going to do anything about this. It is just an extract. Is that okay? So as simple as ABC, it is just an extract. So the last part of our requirement is saying that we should also prepare a statement of financial position, by this time extract. So permit me to clean the disposal account and quickly make this entry. Is that okay? So that is still the B part. That is statement of financial position. That is for the 3 good years, but this time extract. This extract, it is for 2020, 2021, and 2022. So we have to look at the extract. Is that okay? So from our question, we have 3 different assets all together. Is that okay? But before that, let's consider the cost of the asset in question. Its accumulated depreciation as usual. Then we consider the carrying amount or the net book value. And we have our currency sign being dollars. Is that okay? So we have the first motor vehicle, being A10, and the cost is 250 from our question. Then we come to consider its accumulated depreciation. Is that okay? Its accumulated depreciation is 50,000. We bring our 50,000, and the net book value will be 200,000. Then we consider the next motor vehicle. So motor vehicle. But this time that is B20. And the cost is 375,000. Okay, B20. Sorry, 375,000. But because we are preparing this for the whole motor vehicle at a time, there is no even need for us to be bringing the individual motor vehicle. Let's just consider the years. Is that okay? So we shouldn't be even considering it one by one, because we are preparing everything for the entire business. So let's say this is for 2020. Is that okay? And this will be for 2021 for easier understanding. Is that okay? So for 2020, from the asset account, you can see that the balance is, the current amount is 250,000. Then we present it over here. And for 2021, you can see that the current amount is 375,000. Is that okay? Then we also consider its depreciation. And for 2021, accumulated depreciation is 125,000. Then we bring the 125,000. We are only considering the carrying amount. So when we get to the statement of financial position extract, we take the cost of the asset for a particular year, its carrying amount, its balance CD. Then the accumulated depreciation to be considered the carrying amount or the balance CD. Is that okay? Then we are going to strike the difference over here. And this is going to give us 250,000, being it the net book value. So the motor vehicle assets 2022, we had a balance over here. The current amount is 475,000. So 475,000. Is that okay? And the current amount for 2022, this is 2022, the current amount is 120,000. We are considering the carrying amount, and this is going to give us 355,000. We are not going to do any addition or anything else because it is just an extract. And basically, this is how we actually made entry for depreciation. But mind you that either you are using but this question we've solved is a straight line method, or we calculate depreciation on cost. In a different question altogether, you can also meet a being a reducing balance method or a diminishing balance method. The double entry for both methods are the same. That is the trick. The double entry for both methods are the same, but the calculation differs. So that is, you calculate one on the net book value, the other on the cost of the assets. That is for reducing balance. For the first year will be on the cost, subsequent year will be on the net book value, and the calculation will be different. Is that okay? But for the straight line method, we only calculate on cost. So the calculation is different, but the double entry is actually the same. So basically, this is how we actually made this entry. But in our next video, we may take another complex question that contains a reducing balance method. Then we actually see how we can also pass this entry. If you haven't actually subscribed to this channel, kindly do so to be part of our channel, and you'll be an official member and actually enjoy the rest of our service. Until we meet, I think, bye for now.